Hello and welcome. Today is the 17th day of January 2015. My name is Derek. Welcome to this weekend's silver chart analysis video. With the price action on Friday gaining 86 cents, a little over 5%, closing in at 1780. The intraday highs were 1783, so closing very close to the highs of the day, and at levels not seen or closed going back to multiple months or the end of the summer of last year. And the pattern that I talk about, that I'm looking for an end of reversal or a reversal switch from, in this case, what was a downtrend, is step number one: get to the 18 average band and have the band flatten out. So in here, the band going lower, price action below it. Then you have this green candle in here and you went sideways. So that was step number one. Of course, step number two was to establish resistance. That never occurred in here, but it did occur amongst the second one. There you have a situation where it flattened out. You could say, hey, it established it here. No, it didn't, because it was barely higher than this level. So no, that was not high enough. Interestingly, you had this day, or these 2 days anyway, where it broke down below multiple key levels of support, breaking to levels not seen in multiple years, and quickly coming back to the band, later breaking resistance, thus establishing new resistance. This level was 1733, so that was the next step. Step after that, come back to the band. Well, it happened here. Multiple support tests of about 15.5, never breaking through it. And then along the way to yesterday's breakout, you had the situation of this resistance area becoming support, and then that resistance area becoming support again. So now this resistance area, as well as Fibonacci in at 1681, that is the next key support level. Next target, 1869. I've talked a lot about that. There's one person here that definitely disagrees with me, because apparently 1780 is the real next level. Now, I don't know why on a mathematical or fundamental level that's the case, or 1830 after that, but that's one person's opinion. Everyone has their own opinion going forward. When I look at these situations, I now classify this as a bull market. I'm expecting all retracements to be relatively small or not massive. Thus, I'm expecting the 18 average to hold all retracements on its way to at least this area. And I'm expecting, if anything, for it to pierce above it rather than pierce below it. And I'll talk reasons why within the weekly time frame. But the stance right now, or the status, should easily be bullish over bearish within this time frame. Now, on the intraday chart of Friday, this is from 9:20 a.m. New York time to 4 p.m. New York time. 1733, of course, was the established resistance level, roughly here. So what occurred was it broke above it. I made my video roughly around here somewhere, stating it broke established resistance and a fast move to the upside. Now it's interesting, and this happens multiple times on multiple different charts, is that you have your gains throughout the day and then it just does a whole bunch of this sideways action. That's very normal on up days, not necessarily down days, for this to occur. Fibonacci that I have within this case was the highs of 1783 for the day and the lows of 1688, which occurred a few hours before the start of this chart. Fibonacci retracement. This level here says 76.4 from the way lower, or 23.6, so it really didn't retrace too much. And then after the market closed at 4 o'clock, it rallied up to 1780. So it actually went up a little bit more at the end of the session. So now let's move this on to the weekly chart for silver. And for the week, it gained $1.29, up 7.1% after it gained 4.63% the previous week, down 40% over the last 100 weeks, up 25% from this point in here. So for trend reversal, downtrend, go sideways, downtrend. Step number one, flatten out, which it's pretty much done that now. Step number two, establish resistance. That's happened 3 times within the views of this chart. And then come back to the band, break, establish resistance. Now every time it came back to the band, but it never even challenged a test of previous resistance. Where is the most likeliest place for established resistance to be? The answer, 1905. And that's why I'm expecting it to be a pierce above that 1869 because of this significant level. Now the Fibonacci I'm using here is the lows of 1416 and the highs of 2011. So this is 23.6 at 19 and change, and 38.2% is a little under 23. So step number one, again, is the flattening out. Step number two, establishing resistance. This isn't high enough for me to say, oh, that's established at 1783. No, I need it to probably come closer to this line. And then at that stage, the band should start to go higher, look to come back, and then break established. Then the weekly chart would be in a bull market. Instead, it's more of a neutral market because it's trying to establish new trend. Let's take a look at this on a different time frame. How about we'll take a look at it on the monthly chart. In the monthly chart, there's the uptrend, support was taken out here, thus the downtrend still in play. Within this, if you start to see that it comes down into this area here, well, that's just yet another resistance test within the band. Number 3 within the downtrend, because this is 1, this is 2, this would be the third one, and you'd be looking for lower prices. But on the contrary here, step 1, flatten out. Step 2, establish resistance at least between 23 to 28 would be the areas I'd be looking for to establish in all those steps past that as well. So that'll be the silver chart analysis. Now, interestingly enough, I was looking at the Swiss franc, and well, this is the US dollar to franc crossing, the daily time frame, and all these little moves in here. Okay, you look like this is an uptrend, finding support at these bands on multiple times, breaking resistance, and it's moving higher than all of a sudden kerplunk. Down she goes. And most likely this caught a lot of people off guard. I don't know how many people on leverage contracts A, got screwed over, or B, cast large based on the side they were at. But I remember when I was learning this thing of charts less than a decade ago, I was told that currencies were the safest one because volatility is normally very, very low. And on median for this one, 0.75%. That's very low volatility. Then all of a sudden something like this takes place. Now let's take a look at this on a more longer term time frame, but I'm going to take a look at this from the other point of view, which is the franc to the US dollar, so thus in reverse. So let's bring this chart up now. And yeah, so there's the situation in here. Goes up. Now notice the time frame. This is 2010 going up to 2011. And all currencies were beating the US point at this situation. And then from 2011 on, the US dollar against other currencies strengthening. So now all of a sudden, breaking this resistance, reversing itself back up again. Fibonacci retracement that I'm using is from this low and this high. So I guess you could state that this is the next significant target that we'd be looking for amongst it. But I think the important thing to notice is, A, the last time they had a massive move, you can't see it too well, was in here, going down. And this time it did the opposite direction. So anyway, yeah, that's it for the Swiss franc, and I want to go over a few comments from yesterday's video now, and then here we go. The real resistance for silver is in at 1780 and again at 1830. I do not believe this move takes us through that area. I don't know how many times I've been gotten with this as well, where you type something in wrong, but you type in another word. So your spell check ain't going to tell you there's something wrong with it. You're not going to get a red line underneath it. Happens to me all the time. It happened here as well. If it does, the average person won't be able to sell physical. The Swiss revalue was a negative event for metals, not positive. The last time it killed gold. Well, the last time it went the opposite direction, and it was only one time. That's a small sample size. Today is a great day to sell physical gold and silver. It rallied almost 100 on gold and $2 on silver in weeks. Now I want to talk about selling physical gold and silver because, A, the average person won't be able to sell physical if it goes higher. I don't care what the price is. The average person, the median person, will say, will always have a hard time selling physical and not getting ripped off or not getting the value they should, because you should be looking to sell for higher than what spot price is, because that's what you're buying it for. That can be a challenge. That can take time to do. So regardless of the price, it's going to be difficult to sell silver. However, if it's lower, it's harder. If it's up, it's easier, because quite frankly, more people want to buy silver if it's in a nice, confirmed, established bull market than they do if it's in a bear market. And as far as great days to sell physical gold and silver, if you are able to sell for what dealers sell for, $3, $4, $5 above spot, depending on which coin or bar that you're talking about, then every day is a good day to sell gold and silver. Why? Because if you're able to sell for $5 above spot and you buy for $2 or $3, well, that's the reason why every day is a good day. But for the most part, if you're looking to profit take, I think more so you'd be looking to do it on the physical paper game, or the physical digital game, if you want to call it such, because overall within these markets, they have always been manipulated. People talk about, well, let's get back to true price discovery. So you want to get back to somewhere we've never been before? That's how I look at that. The markets have always been manipulated. I'm not going to say that they always will be, but currently they still are. So thank you for tuning into this weekend's silver chart analysis video, and I'll talk to you throughout the week next week. Take care.